Welcome to the Retire with Peace podcast, the podcast where we help you create a fulfilling and stress-free retirement. Each week, we bring you expert advice, practical tips, and inspiring stories to help you plan and live your best retirement life. Whether you're nearing retirement or already enjoying your golden years, this podcast is here to support you every step of the way. Let's embark on this journey together and discover how to retire with peace.
Welcome back to the Retire with Peace podcast. As always, I'm your host, Dave Zaegel. Let's set some expectations for 2026 and beyond, for that matter. We'll get into that. But for now, let's just get some good framing and some good thoughts and perspectives around what we will see in 2026 from a planning perspective, investment perspective, all of the above. And that is to start by understanding that something crazy will happen in 2026. Really something crazy, and usually multiple crazy things happen every single year. For some reason, a lot of people, sometimes myself, I don't know, but a lot of people get surprised when things happen that are unexpected, out of the ordinary, and they get really, really fearful about what ifs, and a lot of that can be understandable. But it's important to understand also that things like this, whatever this is, have been happening over and over and over and over for many years. Some cause greater danger than others, but things always happen. And a lot of times it's stuff that we don't even expect. Right now, there's a lot of things going on politically, both locally and around the world. There's artificial intelligence coming up and developing quickly. We're going to have a new Federal Reserve chairman in, I believe, May. And there's going to be all sorts of stuff that we haven't even thought about or we're not considering that could happen 2 days from now. So stuff will happen in 2026. And from an investment perspective and a planning perspective, something's probably going to cause the market to go down. Again, it's more normal that this happens than it doesn't happen. In fact, if it doesn't happen, that's the unusual time period or year. And we have had some years like that where there hasn't been a huge drop and everything's just kind of gone up and down in little bits and made its way higher, and those are fine. But most years, we experience a significant drop or two or three. Three's a lot, but one or two is pretty normal. In 2025, we saw that in March and especially in April when there was a tariff announcement that was, we'll call it excessive. We wound up with some tariffs, but what was announced that day was a little bit out there, and it got dialed back, from that announcement. But that really caused the big drop in 2025. And there were some other time periods like in August where we saw a smaller drop. But we have to understand that that's normal. And it's helpful to come into the year understanding that that's normal. We've talked about this in other podcast episodes where people might ask, well, gee, what am I going to do if during my retirement we have a recession? The answer is yes. When the recession happens, we're going to make sure that we plan accordingly in advance. We need to plan for these things in advance and expect them to happen. Then when they do happen, it doesn't make them fun, but it's a whole lot more fun than if we hadn't planned for them in advance. That's why we go back to the same thing we always talk about: have at least 5 years of income sitting outside the stock market in something safe. CDs, bonds, cash. That way when the market goes down, we say, that's not much fun, but doesn't impact anything we need to do for planning. We'll wait for it to come back up. So as we head into 2026, and we're in there already, as we head further into 2026, let's keep this mindset and expect that something bad is going to happen, and expect that there's going to be a stock market drop. Not some gigantic drop like 50% like we had in 2008. That's not what we're talking about. That's totally separate, and we still plan for that. But we can't expect something that large to happen. But if the stock market drops 5%, 10%, 15, 20%, it did that in 2022, went down about 20%, depending on which stock market index we're talking about. And people barely even remember that. That was only a couple of years ago that we actually had a pretty awful year in the market, and everything's bounced back since then. So if we're talking about drops in that area between, call it 5 to 20%, that should be expected. That should be planned for in advance. And we do that for clients that we work with, and we would hope that you do that if you're handling your own finances as well. But I also want us to mentally prepare for that. It's one thing to have it planned for financially and have everything set up as it should be, but let's prepare ourselves mentally for that. So when it does occur this year, it's not a big surprise. It won't be fun, but it won't be a surprise, and we will have financially prepared for it and mentally prepared for it.